welcome back. You're still watching Global Mantra, and I'm still in conversation with Jim O'Neill, Chairman of Goldman Sachs Asset Management. Jim, let's talk about the very unfortunate incident that's happened. You know, the earthquake in Japan and the aftermath of it. How are you reading to the ramifications of it for global markets?
You know, Japan is the third biggest economy in the world, but it's not grown much the past decade, and the world's coped perfectly well with Japan being weak. So I'm not quite sure why suddenly Japan having problems is so bad for the rest of the world, unless of two special factors. One could be that it's so bad in Japan that Japanese institutional investors have to sell assets they own in many other countries, because Japan is the world's biggest foreign asset. It has $3 trillion worth of foreign assets. And then, of course, secondly, it's coming at a time when we have real fears about the oil price and energy market problems. And it may well be, and the more I'm thinking about this, the more I have to say it's worrying me a little bit. One of the great hopes for the future was that we're all falling in love with nuclear energy again. And on the back of something like this, it's not very easy for a politician anywhere in the West, at least, to stand there and say that nuclear energy is at the forefront of their policy future. And so the markets are worrying about all of that as well, I'm guessing. Never mind, of course, the unfortunate ongoing episode in the Middle East. So, you know, if you're somebody that likes to worry, there's no shortage of things suddenly to worry about. And of course, the markets are expressing that, as we can see.
Yeah, exactly. And the fact is that now there are linkages being drawn to the situation on crude. And, you know, the expectation that if there is a step back, so to speak, on the nuclear energy capabilities of many nations, then the focus for alternative energy with fossil fuel-driven energy, oil, would again go up, and that would mean another oil spike. I mean, is that the kind of story that's playing?
You know, who knows? I mean, I sometimes joke to people the past couple of weeks that I wouldn't mind taking the opposite stance of people on oil. 30 years ago, I did a PhD about OPEC and oil prices, and I say to people that I didn't really learn anything other than forecasting oil prices makes forecasting currencies easy, because at the time it was very popular then, because it was on the back of the second oil price crisis in the late 70s. It was very popular of many experts, and I still have many of the research pieces saying that oil would go above $100 a barrel then and stay there for a long time. And of course it never did. It went down for the next 20 years. And so the ease at which so many people now are saying that oil's going to 150 or 200 makes me, frankly, a little bit skeptical. One thing that people are not paying attention to is the latest 5-year growth plan of China has buried in it, and in the background, some extremely aggressive plans for the reduction of using oil and coal. And if the Chinese go ahead with that, then the underlying pace of demand of oil growth going forward globally, it won't be as big as people think. So, yes, oil, if Saudi Arabia is taken into the middle of this Middle Eastern mess, and if the Japanese situation is at the worst extreme that people are saying, maybe oil goes to 150. But you know what?
Do you think that can happen by this year end?
Maybe it goes to 50.
Okay, that's the range.
You know, I would give it, frankly, having been around as long as I have, I would give 50 pretty much as good a chance as 150.
Over what period of time?
The next 12 months.
Okay, since you're talking about commodities, how can you not talk about currencies? And, you know, you've had a lot of experience in that asset class. What's the expectation? I mean, on three important currencies that everybody's tracking, the dollar, the pound, and the euro, especially on the euro, given the status.
Well, I'm glad you didn't ask me about the yen, because that's one.
No, that is a question that's coming up. Okay. But we'll start off with the dollar.
You know, I think the dollar, the euro, and the pound, they're pretty much three sick current bunched together. You know, when I look at the three of them, it's easy to not like any of them, and therefore it's difficult to have a big view right now about any of them. You know, I can wake up one day and think, you know what, I love the dollar. I can wake up the following day and I kind of hate the dollar. And you know, I think at these prices, with the information that seems to be available, I'm not sure we're going to get any clear trend in the dollar, the pound, or the euro. I could see
over the next 12 months.
Certainly over the rest of this year. You know, my general view is the euro gets close to 140, you sell it. Euro gets close to 120, you buy it. And with the pound, Pound gets over 170 against the dollar, you sell it. The pound gets down to 155, you buy it. And you ignore all the information that appears to be so important at the time. I mean, I have studied, so-called studied, the foreign exchange market for a long, long time. And I like to call it the world's biggest fruit and vegetable store, because the amount of information that is available to people in a market that's so liquid is so powerful. The price gets driven by the information that people don't have yet. And so it's tricky, particularly in the euro dollar. It's a huge, huge market.
What about rate hike expectations from central bankers in the region?
Well, you know, I'll stick my neck out slightly again here. The ECB appears to have told us they're going to raise rates next month. My guess is that they won't. You know, you can trace a lot of fresh problems in the euro area and credit markets to the ECB's aggressiveness 2 weeks ago. And if I look at what's happened and the unstable situation in European credit markets, on top of the mess going on globally because of Japan, I don't see how the European Central Bank can raise interest rates so soon. It doesn't make a lot of sense to me.
You know, they're also talking about stability in the U.S. And in the recovery process. Do you see the Fed perhaps signaling rate hikes by the end of this year?
I think what is increasingly likely is the idea that there'll be a QE3 that follow QE2 is just not going to happen. I think we're going to start seeing some signs from the Fed to prepare the ground for when QE2 finishes, I guess, in June. That's it. Because I do think the US economy is recovering, and the Fed has to start thinking about some kind of exit strategy from some of these QE measures. Because the Fed believes in such an output gap model, I'm not sure we're anywhere near any rate hikes, but the language is going to start changing soon, that's for sure.
Okay. You know, talk about the yen right now, and that was another aspect that I wanted to touch upon, given Japan's status. I mean, are you concerned about it, especially the carry trade that's done with the yen? You
know, I don't understand why the yen's so strong. I was brought up in this market to pay a lot of attention to not just balance of payments, current accounts, but those included, but also the underlying domestic things that relate to that, domestic savings rates included. And today, Japan's household savings rate is lower than America. That was not the case for the first 25 years of my career, and it changes the equation quite a lot. And if I look at Japan's weaknesses even before this crisis, Japan needs to be as competitive as it can, because it's losing people and it doesn't really have much underlying domestic growth potential. So particularly with this crisis, the Japanese authorities are going to have to consider, if the market doesn't do it for them, deliberately weakening the yen. And I find myself, in terms of the yen and the other three currencies you asked me about a minute ago, the one which is easiest for me to adopt a big view, I've been wrong on it because I've had this view for a while, is the yen. And I think the next big mover of the four is going to be probably a weakening of the yen.
To what? I mean, how much downside do you see?
Well, we're trading, what, just about 81. You know, I could see the yen in the next 12 months easily back above 100 against the dollar, possibly 110.
All right, Jim, we'll take a short break on that note. When we come back, we will speak specifically about India and the potential he sees in the region, given that Goldman Sachs is very bullish.
This year is not going to be a great year for the Indian market, but what happens after that, it kind of depends on the economy, Jim. That finally, India might grow by more than China, which of course is such a great ambition of so many Indian thinkers and probably Indian people. And because of the demographics, it is possible. I think equities still look highly attractive.